Hey guys, welcome back to the show. It's Danny Elliott. So today I want to talk to you about mortgage rates and some challenges that banks are having right now because nobody's getting a mortgage in this real estate market because nobody wants to pay 7% interest. But if you're out there in the real estate market right now, guys, if you're looking for a house, you know that there's no dating the rate. There's no marry the house and get a 3% rate next year. There's no rates are coming back down again. And the banks know this too. So let's get into this. Because WaFd, this is a bank in Washington State. It's the most well-capitalized bank in the state of Washington, the most assets. But Seattle-based WaFd Inc. and its subsidiary WaFd Bank surprised the finance industry in January with a sudden exit from the single-family mortgage lending business. The move results in the layoffs of 7% of WaFd's staff. So here's a quote. From an interest rate risk standpoint, you aren't getting paid to take the 30-year risk today, especially with the unprecedented nature of today's market, WaFd CEO Brent Beardall said. He said, we can see some pretty wild swings in terms of interest rates, and to take 30-year risk, you should be paid a substantial premium to do it, and you're not getting that in the market. So what does this really mean, guys? This means that the banks themselves, the ones who generate these new mortgages, they think that interest rates are going to go up. They're concerned about, the bond market as we go forward into this year. We already know that no one is buying, and we're going to get into this. If you look at some of the predictions around what's going to happen with existing home sales this year, basically it's maybe low single-digit growth in existing home sales. Not a lot of optimism out there about the potential for volume on the purchase side, as well as the refi side. And so what are they going to do? They're going to focus on business and commercial banking. They're going to focus more on small businesses. But they say here, high mortgage rates are creating a lock-in effect for homeowners. Yeah, so if you have a 3% rate, you're not going to let go of the 3% rate to go to a 7% rate, right? Especially with high home prices right now, right? Everything is like there's plenty of inventory. There's just not enough cheap money around like there was in 2020 and 2021. And WaFd was a portfolio mortgage lender. Now, this is important, meaning the bank kept the home loans on its own books rather than selling them to government-sponsored enterprises like Freddie Mac or Fannie Mae. And Beardall says it's hard to compete as a portfolio lender. So most of the loans out there are sold directly to the government. And the Fannie Mae and Freddie Mac loans, the FHA loans, the VA loans, all these different products, they're backed by the government. So that means if you stop paying your mortgage, the government's going to back you. That's what's going on right now. Everything is stuck in the foreclosure process. Everything is being muted because nobody wants anyone to know that we have all these homes in the country that are in default right now. What are they doing? They're giving them loan mods. They just give them a new note, and now it's a 40-year mortgage. They didn't even ask for a modification. They just get a letter in the mail saying that you've been given one. So you just continue to not pay the mortgage. Everything's backed by the federal government. Everything is insured. The bank is paying the property taxes. They're 30, 60, 90 days delinquent. And it's being covered up right now. The bank says here they're going to focus on serving small businesses more thoroughly, and asked why they didn't start selling a Freddie Mac or Fannie Mae. Beardall said lenders doing that are a dime a dozen. No money down, never pay the mortgage. The VAs are the best, guys. Some of these people have never paid, and they got a loan mod, 40 years. These people are borrowing against the home, debt games. It's looking just like back during the great financial crisis. It's looking the same way as it looked back then when you had these people, like I used to call them party houses, because I was in my 20s at the time. You just have these people, they've never paid their mortgage. They got in for for nothing down, never made a payment. They got to stay there 7 years and just trashed the entire house until one day, like they got caught when they weren't home, and the bank came out and secured the property the day they weren't there. They changed the locks. They put the paper up on the door. They said, this is being taken back by the bank. They went in and winterized the thing. So, but it took 7 years to get these people out. My property value went into the toilet because there were foreclosures all around me. I was surrounded. It was like a war zone of foreclosures. This is what's happening right now in the real mortgage world. Okay. And banks are not lending. That's what's going on here. And that's why WaFd is out, because they know that transactions are down. They know there's really no point in staying in this game if there's going to be no business. And that's what it looks like it's going to happen this year. It's going to be just a very slow real estate market this year. And it's because of the high prices and the high interest rates. So what we really need is we need these foreclosures to go through the process. This has got to get worked out at some point. And, the longer we keep on extending and pretending, the longer it's going to take until real people can be able to afford homes again in the United States. So it's really, I don't know, it's not a good thing what we're doing, but the government doesn't want any bad news. The stock market doesn't want it. Nobody wants to really come out of the closet and say what's really going on. Like, hey, we got all these people in default. When are we going to let these foreclosures work themselves out, right? These homes are being totally destroyed, the party houses, right? These people aren't fixing their houses. A lot of wear and tear. They aren't maintaining them. They aren't cleaning them. The value of these assets are going to be way, way down. Like, you think you're going to get your Zestimate, you could forget about it. I mean, once these foreclosures work the way through the system, but it remains to be seen when and if that will ever happen, because we've just been extending and pretending forever. But I wanted to bring you this quick article here from Rick Morgan was the author of the article. It came out February 3rd, but this is it right here. We got 7% today, and in 2020 and 2021, it was 3%. That's the big problem out here in the real estate market. So appreciate you watching the show today. Please give me a like and a subscribe if you would. We got 8 subscribers now. So if you want to be number 9, give me some love, and I'll talk to you in the next episode. Thanks for watching. I'm Danny Elliott.